Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, all. Ira Epstein with your weekend edition of your agriculture update, and this is for January 12th, 2018. Now remember, the weekend edition is different. We start off with the monthly chart, then we go to daily charts. Monday through Thursday, I give you daily charts and start off each one with a weekly chart. So you start with the weekly, and then everything else is the daily chart from there. Want to also remind you all, one of the things that keeps this going is you telling your friends about us. The services you can see is free. The more viewers we get, hopefully people will want something from us and they'll end up buying one of our products, and that's what keeps this all going. So otherwise, I don't need to do it for my health. Our viewership is growing. I need your help. So that's one of the things I ask at the beginning of the year. Today we had the big USDA report, and the shock in it was in the wheat market. I had sent out a tape last night where CME Group people were looking for wheat to be the big report, and people were hoping to see what? That the wheat would gain on other markets. Didn't happen. If anything, the farmers went out and planted all categories of winter wheat bigger than the trade had estimated, so the market came down. In the corn market, the bushels actually per acre, the final numbers went up about a bushel an acre. That put a little bit of pressure on here. And I've got the Jan beans here because they expire right now, and I just wanted you to see how they went off the board, but they did get a bounce today. In the agriculture markets, we've been feeling the pressure, as you know, of crazy weather. It got so cold that you drove cattle prices up dramatically, and as soon as the weather broke a bit, they came down almost as hard as they went up. But we'll get to all that. In the soybean market, you can look back and say that the range still hasn't been broken from when we got up to the $12 mark in 2016 down to the 2017 lows of $9.25. And this is the monthly bar chart, and it is still in a down thrust. But if you take out last week's high, right here, see that high of 10.15, I would start changing my tune. Are we there? We're nowhere near it. Therefore, the down thrust is still in it. When we come to a weekly area chart of closes, you can't get away from the fact that the market's gone from $10.25, the high point here, down to a new low close this week of $9.44. Now remember, we're going to lose the January soybeans, so the months are going to change, and March is going to take the leadership now. On the weekly bar chart, and the same thing is going to happen here, you can see the breakdown of the market, and if you visualize the swing line, I can put it on for you, you get a clean pattern of lower highs and lower lows. This is a chart without the swing line. In my charting course, I teach the use of this, and you get to see that the trend is down. Therefore, the risk in being short, if you want this pattern of lower highs and lower lows to stay, is not to take out the 966.5 area. As long as that stays in, the pattern and the trend is down. What about where the moving averages are? You're under all the averages. You've got the 18-week average under the 100-week. Market is under both. That's bearish. Where might support come in via an algorithm called Bollinger Bands? Gosh, you hit it today. That number is 943.25. You hit 937.25, and you held it. It's no different than when you rallied up to the upper Bollinger Band and you ran out of the momentum there. Now the question is, does this market have the ability to use this sideways action to start pushing this band down and take prices even further? If it does, the $9 mark could easily be the next target. So the question is, what happens next? In terms of momentum, this market is still bearish. Remember, on the slow stochastics, unlike the daily ones, you're just looking at the broad picture as to are they pushing up or down. They're looking down. So the trend is down, the bias is down, momentum is down. In the meal market, you're just breaking this market down on the weekly chart. So this market, unless you were to take out last week's high, which is 318.90, has begun another leg, lower highs and lower lows. If it goes to the lower Bollinger Band, 304.90 is the projected support zone, about $5 lower. If it fights a battle, I would expect to see resistance on the upside, that is, if it tries to get back up, between the 317, the 18-day average of closes in red, and 320. Trend down, you'd have to bust through those highs. Got it? In the soybean oil market, I'm going to call on the longer-term chart just going like this. The market comes down, makes a lower low, got through the highs right here. That's the key. If it gets through there, I'd look for the 18-day averages resistance, and now it's fallen back to the 100. Momentum has turned down and the bias is down, but it's certainly not as clean trending as the soybeans and the soybean meal are. Now, in the corn market, you could argue that, and I am arguing, you've still got the pattern of higher lows and higher highs. However, on the weekly chart, you negated the bullishness by closing under the 18-week moving average of closes, which was 348.25. So I'm going to call that neutral. If you look at momentum, the push to the upside has run out of momentum. It's now faltering. It hasn't turned down, but it's certainly faltering. When we come to Chicago wheat, today's low of 418.75, or this week's low is really the right way to say it, took out this 420.75. So now you've got a higher high and a lower low. You've left the small uptrend you had at work. And what stopped the rally when you look at it? The 100-week average and the combination of the 18. Those two came together to stop the trend, and today it officially ended when, if I take this off, you had a pattern of higher lows, higher highs. Where would you expect the resistance to be? I'm going to say the 100-day average. If it falls back, support 428, but you lose the trend if you take out 420.75. And that's exactly what happened. I'm going to call the market now a big nothing. In the cocoa market, similar to what the wheat was doing, this market's got a pattern of higher lows and higher highs, which is friendly. That's in an uptrend. However, because the market's under the 18-week average of closes, the red line, the two negate each other. You got nothing. And then when you look at momentum, you had a downside thrust that has run out of steam. That's why I look at it. The sugar market is one that I think took the market, especially me, by surprise this week. I thought this market was prone to get up to the upper Bollinger Band. I didn't think it was going to run out of this momentum. Obviously, the pattern is a lower low and a higher high. 1562 would be the upper Bollinger Band, and momentum was still pointing up. This market gave that all up this week and went right back and closed under the 18-week average. So you have a market that lost the longer-term momentum. The bias, if you will. The bias is down, momentum is down. You still have no trend because you got the higher high, lower, and low, but the market's got two of the events against it. In the coffee, like the sugar market, you've got a lower low and a higher high. You've closed under the 18-week average, so you've put the bias back down, and momentum is turning down here. If the market grabs traction, maybe it can get to the lower Bollinger Band. If it doesn't, I would expect the battle at the 18-week moving average of closes. Cotton has been one of these son-of-a-gun markets. Look at how strong, and momentum is still bullish as can be. You've got higher lows, higher highs. You get up and close back under the Bollinger Band and right back over it this week. This market is still bullish, but being over an upper Bollinger Band doesn't last that long. In the cattle market, we know 2 weeks ago with that terrible cold that we all experienced, cattle market shot up. If the weather breaks, so should the cattle, in theory, because they weren't able to ship them, and they were losing weight if they were out in the feed yards. Market backed off last week, and this week came down to the combination support of the 100-week average and the 18. Are we trending? The answer is no. You've got a lower low and a higher high. The momentum of the market is also turned down, so we're into support without a trend. That's all that I could say. The hog market, if it takes out this 69.20, could be in trouble. And I think it's 69.20. Let me check the number here. 70.20. Couldn't even read it there. If it takes that out, you'd end this pattern of higher lows, higher highs. You hit the upside targets and been running against the upper Bollinger Band, and you have not, I want to say the word not, lost the upside momentum yet. you still have momentum on the slow stochastic pointing higher. So it's an interesting week. Obviously, seeing a dollar crash for all purposes, I mean, that's a big drop in the dollar in one day, 87 points. Will it help our export business? Where are we going with everything? That'll be the question we all ask ourselves. As I started this off, I want to tell you something. I have decided to be able to let the people that pay for my research help network me. And in essence, what I'm going to be doing is I include, as you know, my videos, my written updates, my oral updates. But if you're a paid subscriber and you bring in a friend to try my service out, and that friend decides to become a paid subscriber, I'll give you a free month to your subscription of my service. Bring in another friend, I'll give another month. Have your friend bring in a friend. It's called the networking. And that's basically what I'm after this year, is getting more and more people to watch us as they're watching our videos. You're going to get the same thing, in fact, probably more. As I told you, I'm beginning a cryptocurrency service, and I'm going to be adding more price count services to the things I do. I've taken over for the firm writing the research on price counts for the financial markets. So how do you get all this? Give us a call. Go to our website, sign up for the free trial to my research if you haven't had it. You can come right up here and you can click on, if you're watching me on YouTube, and that'll take you to the form underneath us. There'll be more about this and how I intend on networking this all for you and your friends. And for those that aren't a subscriber, maybe we'll work something out for you too. In any case, I'm Ira Epstein. You have a great weekend. Remember, we are not open. I will not be recording on Monday, Martin Luther King Jr. Day, but some of the electronic markets at night will open on Sunday night, and they'll close at Monday around noon. So you have to know which markets are going. I put all that in our information this morning so that people that get my updates know how this is all working for the holiday. I'm Ira Epstein. I'll see you on Tuesday.